Hi, this is Michael Jones, Chairman and Chief Executive Officer of Caravel Concepts. Welcome to Market Insights, our weekly commentary on financial markets. Let's get started. Well, believe it or not, we are now in October, and the election is about a month away. And that means it's time for us to start thinking about what the election may mean for our portfolios and how we might want to be positioned in anticipation of the electoral outcome. Now, I know what you're thinking. Oh no, he's going to talk about the debate.
No, God! No, God, please, no! 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 No!
No, we are not going to revisit that particular 90 minutes in American political history. Instead, we're going to talk about a different election that I think may be more relevant for how portfolios should be positioned over the next 30 days. And that is the Senate election. Now, why do I think the Senate election may short term be more important for your portfolios? Well, let me explain. So as everyone who's been following our Market Insights knows, we believe that what's caused the market to go up so dramatically is the Fed has been printing a ton of money and dumping it into financial markets. And what has caused the recent market pullback is the Fed has hit the pause button on their money printing machine for the last several months. What markets were hoping for and are still anticipating is another stimulus bill. Another stimulus bill with another trillion or 2 trillion of deficit spending would force the Fed to crank up their money printing machine, inject more money into financial markets to finance that deficit spending, and we could get back on the rally train. The new COVID stimulus package has been tied up in all kinds of political wrangling, and until and unless it is passed, we believe markets will be vulnerable for more downside. Now, if you don't believe us, in the last 24 hours, there's been all kinds of rumors that Secretary Mnuchin and House Speaker Pelosi might be approaching a deal. And as a matter of fact, it does look like, with Pelosi having lowered her number to 2.2 trillion and Mnuchin bringing his number up to 1.6, they're kind of within shouting distance of a compromise somewhere between 1.8 and $2 trillion. That's fantastic news, and financial markets are celebrating. But it can't pass unless it gets through the Senate. And there is an issue there. The biggest issue is that, unfortunately, in my opinion, what senators are going to be asking themselves as they discuss whether or not to vote for this new stimulus package is not what's in the best interest of the American people and the American economy. It's going to be, will this vote make it more likely that my party is in the majority after November's election? Because if I'm in the majority, I call the shots. If I'm in the minority, the shots are called for me. And that decision on how to vote for this stimulus package is complicated because we have the Supreme Court nomination fight coming up. And how are voters going to react? Who is going to come out looking bad? Who's going to come out looking good? The political dynamics are all up in the air until that Supreme Court nomination fight is over. And until that is done, it's going to be, in my opinion, hard for the Senate to make much progress. And after it's done, it's hard to predict whether senators are going to think they're going to be better served by passing the COVID stimulus or continuing to wait. Now, that means that there is another election that could have big implications for financial markets.
You're joking. Not another one?
Because if we go into the presidential election and we do not have a clear winner, and both President Trump and Vice President Biden made it pretty clear that they were prepared to wait several weeks while absentee ballots are either counted in the case of Biden or challenged in the case of Trump, but they're thinking that this could be a couple of week process. If the Senate has already passed the stimulus bill and the Fed's money printing machine is cranking away and pumping money into financial markets, then I've got confidence that despite that political uncertainty, financial markets may pull back, but they won't crash. By contrast, if the Senate has not yet acted, if they've gotten all balled up in the Supreme Court nomination fight and they're still sitting on the sidelines, and the Fed has still got the pause button pressed on the money printing machine, then going several weeks without knowing who the president is, that could be very, very tough for financial markets to accept without the Fed on their side pouring in liquidity to support asset prices. So, from our perspective, until we see what happens in the Senate, until we know that we've got the stimulus package passed and the Fed is cranking up and on our side, we think the best advice is to stay cautious and just keep waiting. Once the stimulus package is passed, there's going to be lots of opportunity to participate in the upside. If the stimulus package doesn't pass before the election and we have an ugly contested contest, then you'll be glad you have a little firepower to put to work at those lower asset prices. Because, and this is the most important thing to take away, ultimately, whether there is a Democrat or Republican controlling the Senate, and whether there's a Democrat or a Republican in the White House, when we get through this election, and we will get through this election, there will be a COVID-19 stimulus package, the Fed will be cranking up their printing press, and markets will be ultimately higher in 2021, in our opinion. And so it's just a matter of, do we stay cautious now? And we would suggest that's exactly the right strategy until we see what the Senate does. Thanks for joining us for Market Insights. We hope you found it informative. If you'd like more of our research, you can get it at our website, caravelconcepts.com, or you can subscribe at the link below. Thanks.